Greetings again, ladies and gentlemen. This is Sanford Khan, your Rogue Economist, otherwise known as a business author and speaker. In Rogue lesson number 23, it was about what could cause the stock market to crash. There were three things, if you remember. I'd like to continue down this road in Rogue lesson number 24. The title of this presentation is How You Could Detect an Upcoming Bubble Crash in the stock market. How you could detect it, what you could look for, what signs. And I'm going to keep it simple. In one of my other videos, probably a long time ago, I don't even remember which one it is now, I talked about Occam's razor. When I was first introduced to Occam's razor, I thought it was a shaving instrument by the Occam Razor Company. Well, how wrong I was. Occam's razor was an insight by William of Occam, who was a 14th century English philosopher and theologian. Put in modern language, not the English they spoke, but put in modern language, it is basically the simpler the solution, the more likely it is to be correct. So I'm going to keep it simple. And this is what I use. I use the S&P 500, not the Dow Jones Industrial Average. S&P 500 is more indicative of the stock market than the Dow. And I look at the 50-day, the 100-day, and the 200-day moving averages of the S&P 500. And as of the date of this video, as the video is being made, the S&P 500 is above all three of those. And that's something you should watch. It would be the 50-day, the 100-day, and the most important, the 200-day moving average of the S&P 500. As long as it could stay above the 200-day moving average, it could go through the 50-day and 100-day. That's a warning. But that could just be a correction in an ongoing bull market. It's done it before. It's gone through the 50-day and the 100-day, but it stayed in or around the 200-day moving average. Sometimes I've seen it go just a little bit below, but then bounce right back up and continue the uptrend. That's just a normal correction in an ongoing bull market. Now, most of you may have trading accounts, and you can look up the 50-day, 100-day, 200-day moving averages of the S&P 500. But being your rogue professor, I am going to do you a favor, because this is where I get it myself. You could go to this. Let me. I got to remember that it's inverted, isn't it? So look at this URL here. You could go here, and the person or this company bar chart has not only 50-day, 100-day, 200-day moving average. They have other information that you may find very interesting. So it's www.barchart.com. barchart.com /stocks/quotes $$ SPX capitalized / technical analysis. You could freeze the frame here and you could get it and write it down. I'll just hold it for a few more seconds. There you are. Do you have it? Do you have it? Freeze the frame, write it down. Use this. It's so simple. It's so simple. It's updated every day. Are you done? Okay. Freeze the frame, you could get it. Anyways, look at the 200-day moving average. That's the most important. The 50 and 100-day moving average will give you a clue that the market may be entering a temporary downtrend, intermediate downtrend. But if it busts through the 200-day moving average, busts through it, slices right through like a hot knife through butter, there's going to be problems in the stock market. And as I said in Rogue Economics lesson number 23, this is number 24, that the downside, and I agree with Harry Dent on this, is going to be probably vicious because there'll be margin calls right and left. And that's just going to accelerate the downside. Anyways, this is something you can look at. It's dirt simple, it's easy, and as Occam's razor said, the simpler the solution, the more likely it is to be correct. Look at it. You can look at it every day, the 200-day moving average and all the other averages you want to. Anyways, all this information is contained in my book. This is a commercial here, folks, a short one. A Rogue Meister's Guide to Free Thinking. That's on Amazon in both ebook and paperback. Suggest you get it. Very affordable. I keep my books really cheap. Anyways, appreciate it if you could pass this video on to other people and hit that red subscribe button down at the bottom. Appreciate it very much. Thank you. Until we meet again, prosper and keep your money green. Take care now, folks.